Good morning. It's Tim Seymour, December 18th. It's about 9:05 a.m. and emerging markets are trading mixed to down. Down night in Asia, China and Shanghai down 2%. Continuing a move down, which for the Shanghai is down about 10% off the highs in July. Continuing to watch the flows there, but people are rotating away from some of the hotter, bubbly markets, and China clearly is a place where people, at least into year-end, continue to have some concerns. India down 1%. Currency weaker there by about 35 bips. Malaysia off 16, Taiwan up 15 bips, and South Korea flat. Into Central and Eastern Europe, Russia's up 73 basis points. Had been higher this morning, higher with crude, which is moving higher on potential conflict in Iraq, with Iran troops having crossed the border and surrounding one of a primary oil well there, putting the supply disruption bid into oil, helping Russia out. I think that's a temporary phenomenon, even though I think Russia continues to trade well into year-end. Turkey up 31 bips, watching the currency there, which is actually slightly weaker this morning. Into Latin America, Brazil's opened down about 65 bips, currency weaker by about 36 bips, overall market down 1%. Mexico flat, currency 50 bips weaker. Into South Africa, market's up 57 bips, currency weaker a bit. So again, dollar strength continues to weigh on markets, and certainly the risk trade is under some pressure into year end. Volumes remain light, and that's adding to more pronounced moves in some of the emerging markets here. Dixie over 77.80 is a level where folks are looking at the next leg up. For us, that's somewhere around 80 3/4, where I believe you really have put a top on what has been an extraordinary move, and what's actually been reasonably resilient trading in resource and emerging market stocks. Looking at the headlines overall, China's property stocks continue to bear the brunt of what appears a government crackdown on speculation. So stamp taxes on sales moving out, maybe some additional and punitive charges being put on some of the speculating that goes on in that market. Other headline news to watch, the ECB has come out and said that the overall losses in the region could be over $13 trillion, which is a higher number than people expected. Don't think that has a big impact on today's reality. I think it has a big impact on momentum, which is somewhat wounded here, and I think we're going to need some more positive data in terms of loan improvements. The financials, again, around the world have been the place where people have been most concerned, layered in with the sovereign credit issues out of the fringe part of Europe. Thanks.